Hey, welcome back to Two Stupid Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're going to talk about that long-awaited thing. As you know, on this channel, we're big Alibaba bulls. They just had an earnings report release for the final quarter of 2021. We're going to dive into it, give our take on it, and talk about what we saw.
Yeah. If you like this kind of entertaining stock market content where it's two stupid guys trying to figure everything out, give us a like and subscribe. Okay. Two Stupid Guys Trade Stocks.
All right. So the real question here is Charlie Munger happy or Jack Ma sad? What's going on?
Or also me, because I also have an uncomfortable amount of money in this one.
Yeah, I know. Definitely, portfolio allocation is very important when you start talking about positions like this. Especially, this is their 1 year chart. Just power on down, kind of searching for a bottom. It did have a nice resistance level at like 110, which it bounced off of a couple times. But now with the most recent earnings report, it broke through that and bounced off of 100.
Yeah,
Yeah.
definitely not fun to watch. Although I was, there was other things happening at the same time,
Yeah.
i.e., Russian-Ukraine invasion, so it kind of overshadowed some stuff.
Yeah, one nation and invading a sovereign nation, neighboring nation. Yeah, I'd say that's enough to kind of move the world needle a little bit. Um, But this is what we saw this pretty abrupt rebound here off that 100 share price, and during the trading. This is only a 5-day chart of the earning this past week's earnings.
Sorry.
Yeah, fortunately, it didn't pierce that. But the unfortunate thing now is that 110 level, which was a very strong kind of support level, is now above us, meaning now it's a very strong resistance level. So we'll be interested to see if we can retake that level. The highlights basically $38 billion in revenue versus 38.9, 265 EPS versus 255 expected. So they missed a little bit on revenue, but they beat on actual EPS. The revenue quarter over, this quarter year over year was about a 10% growth. If you look at the 9 months, their fiscal calendar is a little bit off from a typical calendar. So they're working about 22% over the last 9 months in terms of revenue growth, which is right in the middle of their guidance, which was 20 to 23% given at the end of the last quarter. They
Um,
did.
do
What's that?
they? Wasn't it kind of expected to have a deep drop in growth because of the 2020 year was absolutely insane?
Yeah. Oh, certainly. When you talk about year-over-year comparables, yeah, definitely. They have other things that they talked about a little bit here in terms of the Chinese consumer lagging behind a little bit, and also competition, right?
Right.
Yeah. So we'll talk about it at the end, but they did execute $1.4 billion in share buybacks over this past quarter, and they are still sitting on $75 billion in cash. As you may be aware, from August of 2021, Alibaba has up to $15 billion in share buybacks approved. They've executed about half of that, about 7.1 billion, meaning they have about another 7 billion and some change they'll be able to execute throughout the calendar year 2022
What a
based on
great
that
time to
prior
do it too.
pre-approval. Yeah, I mean, great. You're getting great value, I think, in terms of share repurchases at this point in time. Now, um, their presentation really kind of focused on their user growth right in the beginning, talking about how they grew users across pretty wide base, and you're talking about a total of like 1.3 billion kind of active users at this point. Pretty substantial base. Kind of reminded me a little bit of like reading Meta or Facebook's kind of quarterly statements. Yeah. But grew across the board, as you can see.
Okay. All right.
Yeah.
All
So
right.
even
That's good
even
news.
within China, which is obviously like their home market, they were still growing 13%. This local consumer services is kind of like their delivery services and that sort of stuff, and that was growing even more so in China. And they have good, strong international growth.
So wait, international growth 2020 25. Can you go back
Yeah,
to that last slide for one sec?
I can.
Okay, my bad. Sorry. I was reading the international
Yeah.
growth. Sweet.
Understood. Now, in terms of the actual kind of continual, growth of their platforms, this is what they were like said they were focused in the beginning of the presentation. You're looking at this Tabot deals going up to 280 million annual active consumers, which is pretty significant growth. And then this Tao CI is another one that they're really focusing on. They're really moving into the grocery space pretty heavily, and this is part of that. And they're able to grow that segment of their business rather quickly.
Their logos are awesome.
Yeah,
They're
I mean, I think it's a cultural thing that, like, I don't know if we really appreciate it because, like, I don't know, it doesn't tell me a lot. I'd rather a logo tell me a little bit about what the business is, but I don't
Oh,
know.
you don't get the what it is from a happy bunny?
Yeah, I mean, that doesn't really tell me a lot about what's going on there.
You're not paying
Bunny's
attention.
happy. He's just not a sad bunny.
That's fair.
So same thing. They actually have a couple of this LME is actually a new segment to me. This is they're considered like a kind of like an Uber Eats. This is a delivery to home. So when they talk about the local consumer services, this is what they're saying in terms of that other segment that's growing even more than their actual online retail, is doing these other kind of add-ons.
And he's in I think it was last quarter, you actually made a slide of all the different businesses encompassed under Alibaba. And it
Yeah.
literally looked like a Disneyland like theme park. Like they have so many moving parts. It's really hard to keep track of, which is why I
Yeah.
let you do all of this.
At the end of the day, too, a lot of them are, I don't know if you've ever read Google or Alphabet's kind of quarterly report, but they sum them up under other bets, kind of
Mhm.
this umbrella term of things that could be something and are growing and hopefully will become something, but they're not really accretive to value at this particular point in time. You'll see as we get into this, there's really only two segments as of right now that are actually driving like positive EBITDA.
Got it.
Yeah. Once again, like I said, continued growth, also international, big segment here. Look at this, 52% for Lazada. That's their Southeast Asian arm, which is very impressive. They're also kind of growing internationally too, with both the AliExpress, that's outside Southeast Asia, and Ali Cloud is pretty broadly available. It's a cloud service provider, so kind of not surprising by that.
Yeah, I would assume that would be the one that they're looking for the biggest gains in over the next couple years.
Yeah, that is actually the second unit that is positively accretive in terms of EBITDA right now. You'll see in a
Okay.
second. Now, this is as you kind of highlight or suspected there. They're looking for a 5x basically in actual
Oh,
China cloud market over the next 5 years
called it.
or 4 years. Yeah, very much so. Their quarter over quarter performance in this segment, we're going to talk about it as well, is about 20%, which was okay. But when you're talking about like Microsoft Azure is growing like 50%. It could be more impressive than that for sure. They did lose a major client. The rumor is that it may be ByteDance, the parent company of TikTok. Yeah.
Ooh. Wait, do we know we it's not confirmed?
No, it's just a rumor. That's what I haven't heard anyone postulate anything outside of that, but I have heard that one several times. They did not comment on that. Now, finances here. All right. So this kind of breaks down the year-over-year growth in all these different segments. As you can see, this China commerce, you're looking at about a 7% year-over-year growth. Uh, good, but nothing spectacular. But
Nope.
it is by far and away their largest segment. So it's hard to grow as you get to that level of scale.
Right, which we
Um,
kind of saw with the Facebook deal. Once you get to a certain thing, you can really only increase your margins, not really growth.
yeah, exactly. So, but they're growing very strongly. Double digit growth in all these other segments that they have, which is impressive. Except for the digital media and entertainment one. I honestly basically kind of like left that one out of any sort of analysis. It's not really important as far as their overall growth. But this innovation category, look at that, 63%. That's like their other bet category where it's small things that are potentially growing very very quickly, but not anything important as far as overall value at this point in time. Now, they did have a major impairment of goodwill. If you see this right here, 25 billion. That's a significant number. It's a non-cash charge, basically. Them writing down the value of some of the assets from companies they had acquired is what that comes down to. So that's why in this particular earnings report, the adjusted versus non-adjusted in earnings are pretty desperate, like in terms of what they're looking at. That's why it gets a little bit more confusing. When you're looking at year-over-year growth of minus 86% is the actual GAAP number of earnings, whereas when you take that out, you're actually looking at a adjusted growth of about minus 27% or 23% on a per share basis.
So wait, do we know what the 25 billion was for?
Just a breakdown of goodwill.
What does write down of goodwill mean?
So goodwill, say you purchase Coca-Cola, a certain portion of the price of your acquisition would be the kind of intellectual property of Coca-Cola, their brand logo, their colors, their recipe,
Right.
that sort
Okay.
of stuff. So it's not really like a hard asset. So the value of that is something that you can kind of, I don't want to say, will fluctuate over time to a degree. It's that premium that you paid for that sort of stuff, and then you have to just get rid of that off your balance sheet over time. I didn't see if they spelled out specifically what assets it was, but it would have been like kind of intellectual property related to a prior acquisition.
Got it.
Yeah. In terms of where they're spending their money, where the cost of this revenue, like why are their margins narrowing a little bit? The big one here really is the sales and marketing expenses have gone up. That's partly due to this increased competition from Pinduoduo and JD. That they've been forced to compete for the consumer dollar a little bit more. You see some growth in some of the other segments, but that's really the one that isn't driving this at this point.
Yeah, JD's the one with the largest drone infrastructure on the planet, right?
Interesting. Yeah. I mean, what that actually entails to their day-to-day operation, I can't really
I
say,
don't know. I
but
saw drone airports. I was ready to throw my money at it. So
well, you'll see that their earnings reports are due in the next couple of weeks. Now, this is where the money meets the road. Cash flow. Cash flow is what really matters. Like when I look at a business, that's what I'm kind of interested in. What I'm purchasing here. Now they're talking about 71 billion RMB in free cash flow over the previous 3 months, which is very impressive.
that's a lot.
Yeah, I mean, obviously you would have to exactly. And what are they using that money for? The share repurchases. Look at how much their share repurchases have gone up from 2020 to 2021.
Yeah,
Pretty significant number.
That's a lot.
Yeah.
Nice.
So that's what they're using the money for,
That's
especially at
what
this
she
point in
said.
time, where they're trading at such a decreased multiple. It makes a lot of sense. And like we talk about net cash here. Look at this: $59 billion in net cash that they have hanging out in their checking account. That's net cash is the total cash and cash equivalents minus debt. So it basically,
So they just got 60 billion chilling, huh?
yeah, looking for something to do.
I
If
want
you have
all
any
of that to go to
ideas.
share repurchases so I can get back to my break-even price. But that's okay.
I mean, they're certainly pushing that way. They talked about share repurchases several times in the conference call. Now, when we look at the different segments here, like I said, their core China commerce segment has the slowest growth, but it is a positive EBITDA margin. So this is this is their cash cow, basically. If you look across the board here, you're going to see a lot of negative numbers, with the exception of cloud, right? Cloud is the only other segment that is positively accretive to shareholders at this particular point in time. So these international commerce, sorry.
For people who have gotten this far, can you just define EBITDA?
It's earnings before interest, tax, depreciation, and amortization. It's a proxy for cash flow. Basically, you're saying, are these units profitable or not at this particular point in time? Units, when you have a business, you have to scale it to a certain degree in order to achieve this ultimate cash flow, because the overarching management of the segment has to be paid for. So even though on each transaction may be making a little bit of money, you have to have enough transactions to basically pay for the overarching management of everything. So you'll see as the businesses grow, they get closer and closer to being EBITDA positive or free cash flow positive. So we're seeing the cloud has been now for, I think this is the third quarter it's been free cash flow positive or EBITDA positive.
Yeah, and it's supposed to grow 5x, right?
Exactly. The K-Now Logistics, that one is just about to be ready to be free cash flow positive. These other ones need some more time in order to continue growing. But the international commerce is very impressive in terms of the growth rate there, and how long before they see that as accretive to shareholders. So they talk a little bit about in detail of each business segment here. Like I said, China commerce is their bread and butter, and what they're seeing. The kind of the management revenue is the one that declined.
Sorry, this slide is harder to hide our campus.
1% year over year. So never good. You never want to see your cash cow decreasing a little bit. They fortunately were able to make up for it in a little bit of other ways with this direct sales and others. That, like I said, that's a large part of the grocery business, the Sun Art, Fresh Hippo, and Tmall Supermarket. They really are moving that direction pretty heavily, which is interesting because like Amazon has failed to take a large portion of the U.S. grocery market. So I'd
Yet.
be interested to look at it. Well, I don't think it's going to happen. Despite buying Whole Foods, they've fallen behind and have failed to make a large inroads.
It's because Jeff
Where
Bezos is trying to get to Mars.
Yes, I mean they need groceries there too.
Exactly, man. Everyone needs fresh food.
But that's like a major driving investment point for Alibaba is groceries, and it looks like they've been more successful than and their Amazon counterpart here, which is definitely interesting. And when you talk about the EBITDA, yeah, you're talking about decreased 20% year over year. A lot of that's that competition for consumers. International commerce. This is predominantly Lazada. Also, AliExpress is another big portion of that. But Lazada is a Southeast Asian arm. Pretty tremendous growth. You're looking at this 14% year over year, and then in terms of the also growing the EBITDA there, from 1 billion to 3 billion in terms of the loss there, but that's in large portion because of the actual scaling of this operation. Okay, now that's the logistics arm. This is the one we were talking about. If you actually look at the EBITDA margin here, from very negative, getting a little bit closer to free cash flow positive, hopefully, and not terribly distant future. That'd be nice to see. Still a relatively small portion of their overall revenue, but definitely an area of growth for them at this point in time. And Ali Cloud, this, like I said, the only other segment that is actually free cash flow positive, and it is indeed the third quarter that it has done so. Only 20% revenue growth. This right here is where they call out. Let me see right here. Impact of top cloud customers' decision to stop using our overseas cloud services for its international business due to non-product related requirements and slowing demand from internet and online entertainment and education. So a little bit of this is that kind of effect of that Chinese government stopping the for-profit education industry. So Alibaba did feel a little bit of the brunt of that, I guess you could say, with that decrease in education in terms of cloud computing business.
Yeah, that was an odd move by Chinese government.
Interesting to say the least, and unfortunately, like I said, it kind of did have an effect on them in terms of how much of that was this alleged ByteDance or TikTok leaving their platform versus these other factors. But still 20% year over year growth, a little bit less. I think it was 37% last quarter. One of the things that they are fighting here, and they call this out in terms of consumer health, is this right here is the gross domestic product growth for China. I'll take out this whole crazy kind of COVID S curve here. But overall, the general trend is down, right? As the economy grows, it's harder to continue growing at such a high accelerated pace.
Right. Makes sense.
The other thing that's interesting is this is China's unemployment data. So it's been called into question the accuracy of this data. I will show you an example of that with the next slide, actually. But you are seeing a little bit of an uptick over the last few months here. The debate is whether or not, like, how much of this is involved in the kind of decrease in the for-profit education industry, and also the kind of Evergrande home building and kind of consolidation there, I guess, or financial crisis there. So the unemployment has definitely been a little bit of an issue for them for a few months.
I want to see how you explain this next chart here.
Yeah. So that's one thing that's kind of funny is if you notice the U.S., this is the U.S. unemployment rate during the whole pandemic, right? We had a really sharp spike and then it kind of came right back down. If you go back that one slide, you don't really see that in China, which is interesting.
No, you don't. It's very odd.
Yeah. It came up a little bit, but you're talking about 0.5%. So that's why some people have called into question their accuracy of their data. And whether or not it can truly be relied upon, because you should have seen a much more dramatic increase in unemployment during that time period.
Not the first time that they've people have called in to question accuracy of Chinese data.
Always question your source. So yeah, right. Especially like if it's a YouTube channel called Two Stupid Guys, definitely question your source.
I just use Wikipedia for all my stuff.
Yeah, exactly. So according to NASDAQ earnings.com or whatever, there are a couple of interesting dates in terms of competitors here. Pinduoduo is March 16th and JD March 10th. This should give us a little bit more insight in terms of the health of the Chinese consumer and how much of this Alibaba kind of earnings or revenue slow growth is due to Chinese consumer versus competition.
So, I mean, the big thing here for people who are in Baba is, we all saw the share price at like 320. Now we're at 100. Obviously, the 320 was driven by the crazy growth they were getting like every single year, just like, and
Yeah,
we just saw Facebook take a massive hit, or Meta, sorry, whatever.
yeah, whatever.
Um, do you see Baba going back up to that price in the next, hold
So
on, 5 years?
5 years, definitely its potential. Now, the thing with Alibaba at this point in time is it's become very cheap. It's still very cheap. If you look at it from a standpoint of market cap is like 280 billion, right?
Which is
So
wild when they have like 60 billion in cash.
so you take out the 60 billion, now you have $220 billion market cap. And now you have a company that's earning was about $30 billion of free cash flow last year.
Yeah.
So this company, in terms of free cash flow yield, net cash, you're looking at like a 12.5% return. That's how much money they're making for every dollar like you put in. 12% return sounds pretty tasty, right?
Yeah, no, that's solid. I
But
don't
when you
think
look
that there's
at
an American company. Maybe Intel.
Intel is actually probably not terribly far off. Their PE right now is around 10, so they're probably in the same ballpark as far as their free cash flow yield for investors. And certainly at this point in time, they're growing more. Alibaba is 10% revenue growth. Intel is 1%, not even.
Yeah,
I think it might have been -1% last year. They're hoping to grow 10%.
right.
So
Right.
yeah,
That's
this
great.
definitely has at this point in time more growth, and is similarly priced in terms of like a free cash flow yield. And then, the management seems to get it. Like I said, that's why they talked about share repurchases so much, and they've been doing share repurchases so much, is that it makes a lot of sense for long-term consumer. We can do a separate video on this, but there was actually Berkshire Hathaway's annual stockholder letter came out today, and Buffett talked a little bit about share repurchases and how phenomenal they are for investors.
Right. They still got 7 billion to do. So last question I got then is, are you gonna buy more, stay the same, sell?
Yeah,
We're at
I'm staying the
$102,
same.
I think, right?
Yeah,
Maybe.
I think it was like 108, 108 some change where it actually closed on Friday. I'm going to stay the same. I'm still going to continue selling covered calls against my position in my main account there to generate some revenue, which is reasonable. I think I got $150 or so by selling one at 140 strike call for expiring March 18th. So it's nice. I feel like I can make pretty consistent income of say $150 a month versus like about a $10,000 position. So
Yeah.
I like doing that.
All right, fair enough. I'm probably gonna do the same, to be honest. I might buy more. I'm probably gonna buy more. All right, guys. Thank you for tuning in. Let us know maybe your cost average in Baba, because I know it's definitely not 108. So, yep. Have a good one. We appreciate it.
Yeah, catch you the next one.